Inflation's surging. Interest rates are brutal. Trade wars are everywhere. The world's a mess, and so is the stock market. But right now, in all this chaos, lies the opportunity of a lifetime. Welcome back to the channel, your ultimate pit stop for real strategies, not headlines. Today, we're diving into 5 dividend-paying stocks that are trading at or near their 52-week lows. Not because they're broken, but because Wall Street's looking short-term while smart investors play long-term. Stocks that could turn a simple $10,000 investment into over $1 million. And one stock at the end? It could grow that $10,000 into $2.8 million, spitting off over $50,000 a year in dividend income. Let's get right into it. Quick framework check. Strong fundamentals. Long history of dividend growth punished recently by fear, not by failure. Solid balance sheets ready for recovery. Every stock here is a dividend grower and a total return machine. It's not about chasing high yields. It's about building real wealth. Let's kick it off at number 5 with a company you probably know, but didn't expect to see on this list. Number 5, United Health Group, UNH. Drop. Down 16.47% this year. Why the dip? Fear around Medicare Advantage reimbursement cuts. Regulatory pressure. Hacking scandal at subsidiary. Change healthcare. Reality check. United Health posted $109.57 billion in Q1 2025 revenue. Profit? $6.29 billion, a 9% year-over-year increase. Short-term noise. Long-term strength. Dividend yield. 1.85%, but they grow it by 18.8% a year on average. That's compounding magic. Projected for earnings $10,000. 30 years later equals $1,463,082. Portfolio $78,713 a year in dividend income, and that's just the start. Number 4, Pool Corporation, Pool. Drop. 10% YTD. What they do. World's largest supplier of swimming pool supplies and outdoor living products. Why the dip? Housing market slowdown. Fewer pool upgrades due to higher mortgage rates, but maintenance, chemicals, parts, is recession-proof. People still need to keep pools running. Dividend yield. 1.57%. Dividend growth. 18.49% a year. Share price growth. 16.09% a year. Earnings $10,000 after 30 years. $1,557,088. Portfolio $41,055 a year in dividends. Talk about passive income goals. #3, DR Horton, DHI. Drop. Down 10.6%. Why the drop? Mortgage rates near 7% cooled first-time buyers. Material costs stayed high, but here's the reality. Housing demand hasn't disappeared, it's delayed. When rates drop, buyers flood back. Revenue still strong. $7.7 billion in Q1 2025. Net income? $810 million. Dividend yield. 1.32%. Dividend growth. 21.48% a year. Share price growth. 15.77% a year. John's $10,000 after 30 years? $1,877,700. Portfolio $11,361 a year in dividend income. Not bad for betting on America's eternal hunger for homes. Number 2, Steel Dynamics, STLD, currently up slightly, but the pullback happened recently. Why the worry? China's economic slowdown. Lower steel prices. Fears of lower car and appliance production. Reality. STLD doesn't just survive downturns, they profit from volatility. Dividend yield. 1.69%. Dividend growth. 14.6% annually. Stock returns. 18.94% annually. Earnings $10,000 after 30 years? $2,300,023. Portfolio $70,000 plus from reinvested dividends. Blue collar industry. White hot returns. Number 1, UFP Industries, UFPI. Drop. Down 6% YTD. What they do. Wood, packaging, and building materials. Boring, but unstoppable. Why the dip? Slower housing construction, short-term retail slowdown. Reality. $1.46 billion revenue last quarter beat earnings expectations. Margin control still strong. Dividend yield 1.34%, fastest dividend growth rate 20.75% annually. Stock returns 19% annually. Earnings $10,000 after 30 years. $2,856,296 portfolio, $52,221 a year in dividend income. UFPI proves sometimes the best investments aren't sexy, they're stable. The world's a mess. Inflation's high. Rates are punishing. Trade wars are heating up. But smart investors know, true wealth is built when prices are low, emotions are high, and the crowd is scared. Today's 52-week lows are tomorrow's 5x, 10x, and 20x winners. You don't have to bet on broken tech stocks or risky startups. You can win by betting on cash flow machines with real businesses and rising dividends. So here's my question to you. Which stock from today's list would you invest $10,000 into first? Drop your answer in the comments. I'm replying to everyone today. And if you want even more passive income strategies, smash that like button, subscribe, and hit the notification bell, because on Pundit Finance, we show you how to play the long game.